We also have spot Ether ETFs coming very likely next Tuesday. Next Tuesday, we are expecting to see the very first launch of spot Ether ETFs. The SEC has given preliminary approval for spot Ether ETFs to begin trading, expected to begin on July 23rd. Now, here's a chart of the of Ethereum, and Ethereum has also kind of gone under the radar for many investors, whereas Bitcoin has got a lot of it, a lot of exposure. People have heard of Bitcoin, but if you ask about Ethereum, probably about half of the people, the same people who know Bitcoin, are not too familiar with Ethereum. They couldn't tell you what it was, and I think that also bodes well because there's still so much more saturated. It's not fully saturated. Neither is Bitcoin, quite frankly. But the point is that Ethereum is even less saturated. And you'll see here, this is a chart of the 250 SMA. Boy, that's a powerful chart. Look at that. The price of Ether comes up to the 250 back in October of 2023, fails, then breaks out above it in big volume, then rallies. And then we just got the first touch of it now, a little less than a year later. And we rejected that price. High volume activated, and then we rallied again. So what's going to happen whenever we see the spot Ether ETFs begin trading? Well, if it's like what we saw with Bitcoin, we may see the price tumble, right? One of those buy the rumor and then sell the news. So this may be buying the rumor here as we are nearing the the approval. So, back in January, you may remember the SEC begrudgingly approved a slew of spot Bitcoin ETFs. And now just 6 months later, here we are with the SEC appearing ready to approve the first spot Ether ETFs as early as I mentioned, next Tuesday. So next Tuesday, when we get together, we may be talking about the new spot Ether ETFs. You've got prominent asset managers like BlackRock, VanEck, Franklin Templeton. All of these are among the 8 companies that are poised to launch these new spot Ether ETFs. No one is really expecting these ETFs to be as popular as the spot Bitcoin ETFs, but many analysts still expect substantial investment interest. If you look at analysts like Galaxy Research, they're projecting monthly inflows of about $1 billion for Ether ETFs. Citi analysts are estimating net inflows of about $5 billion over the first 6 months. They're pretty much in line with the same thing. But regardless, these new spot Ether ETFs are expected to spark volatility. And the reason is this is a much more thinly traded market than Bitcoin, right? And so therefore, when you have this kind of influx, you could really move this market around. So Ethereum is a lot easier to move around than Bitcoin. As far as volatility goes. And, and we may see it mimic the price action of Bitcoin in the wake of the approval, right? But the timing of these spot Ether ETFs could hardly be better. I mean, you got the Fed prepping for its first interest rate cut in September, which we think is a lock. And that should serve to further weaken the U.S. dollar and strengthen the broader investment markets and provide more liquidity, which, again, is all good for an ambitious asset. Quite frankly, the birth of a new asset class here, with spot Bitcoin and spot Ether ETFs. And guys, right behind this one, you're going to have what? The spot Solana ETF, right? Maybe a spot chain. Wall Street's not even close to being done. I mean, they got their Bitcoin, and now they're getting their Ether. And who's next, right? You may have a Avalanche ETF. You may have a Near Protocol ETF. You may have you're definitely going to have a Solana ETF. They've already filed for that. VanEck's already in line. You're going to have maybe a Chainlink ETF or Cardano ETF, a Tron ETF. Who knows? Who knows what's happening? But they have the taste of blood. They're making money from this stuff, and suddenly they're like, hey, we like this crypto stuff, huh? So suddenly they're turning on, tuning in. And they are creating products. There's a demand for it, and Wall Street wants to make money. So look at this particular chart, Ethereum key levels. This is a really important chart we've used to talk about where we expect the price to go. And we have been struggling here up to this close to 4,000, let's call it 3,950 or so. And then down here, you have this support level at around 2,800 or so, 2,750, somewhere in here. We've been kind of grinding between this all year long, right? After breaking out, it's kind of grinding in between this right here. So we are looking for a breakout here above this key level. And the next level really to break out above is around 3650 or so. So we've got a little bit of room here. We might expect a little bit of gyration inside this box, but you know, a breakdown below this box or a breakout, I think, is going to be significant. So that's what we'll be watching on Ethereum. So let me just make a couple of comments here in conclusion. Unfortunately, the SEC is not allowing the new spot Ether ETFs to be staked. So there's no staking allowed. That means no yield, which I think could temper the inflows into these spot Ether ETFs. It's really taking away part of the pizzazz of Ether. One of the reasons that I invest in Ether, aside from the groundbreaking technology and the future potential of Ethereum, is the fact that when I do buy Ethereum direct and I hold it in my cold storage, well, then I'm able to stake it and I'm able to earn a reward, right? Well, that's not going to work. The SEC is not going to allow that with these spot Ether ETFs. So you're going to buy the Ether ETF and you will only have exposure to the capital gain of Ether. You will not have, according to how they, according to how they perform, but you won't have any exposure to the staking yield. So therefore, you don't get any yield for holding it. So you can hold it. So these things are really going to be more trading vehicles, I would assume, and much less, buying and holding, which is going to create perhaps even more volatility in the world of Ethereum. So I have no. I have no expectations of major inflows into these. I don't expect these are going to be, wildly successful as Bitcoin has been, because Bitcoin is more of a digital gold. Ethereum is more of a digital, maybe digital oil. But the problem is that, you're not going to get any kind of yield on it if you buy these ETFs. So I don't think they're going to attract as many people as they might have been able to attract without that staking function being allowed. But regardless, the SEC's approval of the first altcoin spot ETF marks a major milestone here for the crypto space. And then finally, I plan to buy direct, not the ETFs, because of the lack of staking, and also because I just prefer. I mean, if I can own physical gold or I can own a gold ETF, give me the physical gold. If I can own physical silver or a silver ETF, give me the physical silver. If I can own Bitcoin in cold storage, or I can buy a spot Bitcoin ETF, give me that Bitcoin in cold storage, right? So in other words, I prefer it in my hand, not on Wall Street. So I plan to buy direct, I continue to add Ethereum, but not the ETF here. And then I also expect higher prices as we move along. I expect Ethereum to move much higher, in fact, over the next 8 to 12 months. So just a quick update on Ethereum. We do have a question here from Robert, and I may have already addressed this. Robert, hey, Robert, how are you? He says, if the ETF for Ether gets approved, do you recommend we open a position in the new ETF? I'm not planning on it, Robert, and I would much rather get the staking reward by holding it directly than using these ETFs. I probably already answered that question very well. Wade, good to see you this morning. And I'm very, very happy to hear you are recovering, my friend.